Morning, everyone. This is Brad Matheny. I'm being a little quiet because I am visiting family and it is still pretty early over here. So I'm going to go over some basic data, share with you some information, and kind of get you set up for the rest of the day today. Now, gold and silver are making a pretty good little move. This is a 4 hour chart of gold on the left, and we have a 4 hour chart of silver on the right. We had my original predictions indicating that we were going to have to move above this basically 3220 area right in this area, and we have rallied above that level now on silver, making a very solid move to the upside. We've broken above the previous unique high or standout high right here and previous unique high right here. We're targeting this 3225 or 3325 area. Then we're probably going to likely break out into this upper range here, this $33 to 33.50 area. I mean, eventually understand that gold and silver are going to recover completely from this contraction here. So you can see this rally here into November, all the way up to $35. We're going to see gold and silver really move substantially higher. Eventually, we're going to be at 34, 35, maybe even 37 by before the end of the year. It's just a matter of time. Now, my gold cycle patterns indicate an inside breakaway trend in bullish. We're in a warning cycle. We're looking at a breakout. So I'm expecting this inside breakaway pattern to carry off as a very solid bullish pattern. So we're going to go ahead and try to see that move. We're over here looking at gold again, 4 hour chart. We really do need to see gold move above this 2690 area. We're not clear for an upward trend. And again, 2690 will move to 2720. It's not gonna be just a straight off liftoff, I don't think. I think we're gonna be moving into a period of moderate consolidation, kind of like this, a break up into 2720 and then a rally and then a rally. And hopefully before the end of the year, we are going to see this move up to my projected target level of around 2950, 2980 in gold. So it should be a very nice rally overall for the metals once we get this real breakout move. Now, the news of the political uprising in Syria could be setting things off in the metals markets. And like I said, it's a kind of a weird dichotomy right now because we are looking at a rolling crisis, continuing crisis that takes place or likely to take place, prompting potentially an anomaly event, which may put a little pressure on metals. But at the same point in time, traders are actively trying to hedge, and metals are the only place you can really safely hedge. I think the Bitcoin move may be struggling up here at about 100 grand. So we'll see what happens. Now let's come over to the SPY and take a look at my SPY cycle patterns. We have a blank day today in counter trend, so it doesn't really matter. We'll see what happens. We are in bullish explosive trending. We are still in bearish trending here. And what I'd like to point out again, folks, is that we get this bearish exhaustion pattern here tomorrow. A bearish exhaustion pattern would indicate that we are moving kind of into a downward trend here. So what I would suggest is that we watch this move. I'm going to go here to 4 hours. We watch this move on the SPY. We're at 607.78, slightly down. I think we're probably going to roll a little bit on news today and then maybe get an exhaustion pattern down here before we roll back up into these patterns over here. So I think we're looking at a very moderate pullback, okay? Really from 607 maybe down to 604, 603.50. And I think we're going to be looking at a pretty easy little pullback here before we rally up into the 609, 6010 area, or 610 area, 611 area. So again, we're looking at a pause before we rally. So this is again, we have our pause, flat down, and then breakaway, and then carryover in counter trend. Then we end up here in this momentum rally, gap up lower, top pattern, and then a gap potential. This is again around the 19th, 20th. This is again where I think we're maybe rolling into the anomaly pattern. We will see. It's either going to be in December, mid-December, or very close to the beginning of January. Now, I did want to go over some basic data. Some of the work that I do on the weekend highlights the work that I do for my subscribers. The long and short of it, there's a lot of data here. So, Smart Money Index, or SPY base trend index, is showing the dollar demand is weakening. That's also helping metals. We do have a rollover in the Smart Money Index. This is a sign that we could be rolling into an exhaustion of an uptrend. We'll see how this plays out. The volatility index is up at extreme levels, and this is where pullbacks happen. So be aware that we could see a 3, 4, 5, 6% pullback very easily. Stock market index is again just peaking out very strongly here, up into kind of a very tight flag apex right now. And again, we have the leading index is moving downward. Let me find it. That's not it. That's not it. I think that's not it. That's the gold trend index. And the leading index, I think, is here. No, QQQ valuation, innovation. And 1 second, I will find it. It's basically flatlining. Is that it? There it is. So you can see how we've moved into this pausing pattern here in the leading index. This is telling us that smart traders are actually pulling capital away from the market right now. And that's something that's very important to understand. Is you're getting this rally, in Bitcoin, but really, this leading index tells us that money is actually being pulled away from the market. And that's, again, something that's very, very important, especially when we look over here to the commodity gold. Yeah, we're getting a little bit of a rally phase here, but in kind of a depressed downward trend. So again, I think you need to be very aware of the fact that we're potentially rolling downward right now. And again, you can see here we've had very strong consumer engagement rolling up into this cycle channel, purple cycle channel here. I mean, I called this perfectly throughout the last 2 years, but I think we're a little overzealous right now. I think we could get a surprise little pullback and really see the markets roll quite a bit. So be aware, we're still looking kind of for that anomaly pattern. So again, same kind of setup is likely to happen in the QQQ. And QQQ will likely roll into a sideways consolidation phase over the next 2 or 3 days. Now, again, we could see it continue to move a bit, but I think we're going to be really rolling down to fill this gap and then rolling back up. And this gap here is really critical to understanding where we're at in the market trend. We keep rolling through these cycle phases, and you can see, from this low level up here to about this level, creates approximately the same range right here. You can see from this low level up to this high level, it's 100% measured move expansion. I kind of think we're going to see this rollover happen right over here. It's not going to be, I mean, it could be deeper. We see this pullback. Let me measure the pullback. from here to here, set it to red. And if we have a pullback of equal size, we're moving down to 507 roughly on the QQQ. So that would put us at a move kind of like this back out of it. And that's assuming we get an equal type of a pullback right here. This is our pullback, 3.5%. This is our pullback, 3.4%. So not huge, but a decent pullback. And we need to be aware that this could happen at this extended phase. We've got a 100% measured move right now. It's not uncommon. It's very common to see a moderate pullback over here. And remember, that aligns with remember these lows. I had the original low set up here. We had a brief price pullback here, and then a secondary low setting up here, moving into buying, starting to buy into anchor positions. So we'll see if we get that same type of low pullback here by around December 11th, 12th. Let's call it 11th through 15th. We'll see if it happens. Okay, Bitcoin, 98,000 and change, almost 99,000. Bitcoin really is struggling to get away from this previous peak over here. I think it'll do it. Personally, I think the excitement is there and the buyers are there. I will tell you though that, if we do get a breakdown, like I showed you last week with this excess phase peak pattern that's setting up, which would really require us to break below this level. I'll draw a line real quick. We would have to get below this level. It's very critical. That red line, that's 92,100. If we get below this level, if we roll and close down in this extreme downward trending, then there's a very good chance that we're going to come down here to the 72 to $75,000 level. But we need to see this hold up and attempt to rally to new highs, which would be up above basically 103 700 roughly. So be aware that you've got a very good excess phase peak pattern setting up here. We've rolled out of flagging into consolidation. This is really trying right now to hold up. We have to get above this level here. Let me move this out of the way. We have to get above this level right over here, these highs, in order to break away higher. That's our bottom line. We have to get above this 103, 600. I'll modify this and call it. And there we go. So again, we're all trapped right now. We're all kind of trapped. The one thing that is moving that is very solid is gold. So we'll come back in here, take a look at this move. 4-hour gold is hedging. And I think it's hedging risk factors that are related to not only the US market and the US economy, but I think it's actually hedging global risk containment or global risk factors much more efficiently than the US market falling apart. So we're going to see how this plays out. Now, again, remember, I'm working on some new cycle functions. They're pretty exciting. I'm working on monthly and weekly broad cycle patterns, which should show, peaks and bottoms very clearly, primarily for the SPY and the Dow Jones. Should have them done hopefully in a week or two, maybe before the end of the year. But in the meantime, we're getting pretty good, solid trending. The last thing I wanted to show you is that because of this overbought market condition right here, this is extremely high. Okay, very aggressive, low volatility buying in the market up here at 2644. This is the highest level we've ever seen. Yeah, it's bullish, but it's extremely high. And this is where pullbacks happen. This is where you get these sharp little pullbacks up in these upper areas. So I think that with the current uh, TT scanner triggers, you'll see here that we also have nines, eights, sevens on the ranking system. We're getting a couple of 33 thrust triggers here and a couple of pop shift triggers here in these lower sectors. But I think really you would be very wise to pull some profits here, maybe 30, 40, 50%, lock in your stops. I really don't think we have much follow through until possibly end of January. I think we're pretty toppy right now. And like I said, we could continue higher, but I think now is a pretty good time to pull some profits. And if you're really heavily invested, I think you need to be cautious over the next 30, 40 days through the end of the year and pre inauguration. Okay, guys, that's it. Talk to you later.